this is a very important message I want to get across to everybody. I cannot emphasize to you how important this is. You have to trade small to win small and trade small to win big. Do you get the message? The key here is 100% trade small. You trade small to win small. You trade small to win big, but you trade small. And this is a 100% deal. You will accumulate a lot of money, but you have to stay on the small side to trade. Now, traits to avoid. Overtrading. We talked about that. If you overtrade, there won't be you are kidding yourself. You won't be taking a lot of 80-20 trades. Trades 80-20 trades that are first rate trades that you grab at the beginning of the trade. They're 80-20 trades. They're really great trades. But if you're overtrading, you're taking the 60-40s, you're taking the 40-60s, the 50-50s. You just want to get into the game. That is not good. Secondly, remaining in a trade too long. You do not want to do this. I told you, use the momentum after you're in to get out of a trade. To me, it's not important. It's just take your profit and run. Don't try to maximize. Just keep going and maximize something. Every once in a while, you get into a situation where you can, and we haven't talked about this yet, and you're just going to have to go with me on this. You're just going to have to just keep moving your stop, and you'll catch a long trade. But basically, you want to use the momentum when you're short, to use the downside momentum to get out, and when you're long, use the upside momentum while the momentum is strong to get out of the trade. Expecting too much from a trade, but that's the same thing basically as remaining in a trade too long. You don't want to get to that level. You want to get out of a trade. And fourthly, being desperate to regain losses. Now, let me tell you something about this. This is a given. If you get yourself into a hole, which you shouldn't be doing anyway, because these are holes you get yourself into because you are not waiting for your 80-20 trades. You're letting your losses ride. You're keeping your stops too wide, and you're constantly taking losses. If you turn it up, and you try to get desperate to get back into the game, what's going to happen is you're going to build a trap for yourself. You're just going to go deeper and deeper. You're digging a deep, deep hole for yourself, and eventually they're just going to put the dirt over you, and you're going to be a dead man. So you do not want to be in this desperate to regain losses. That's the most ridiculous thing I've ever heard. Everybody in this business has good days, and you have days that are not good days. But what you have to do to be in this business is how you can control and avoid the bad days. How do you do that? You do that by shutting things down when they're not working for you. You tried 80-20 trades. They didn't work for you. You took some small losses, but they were legitimate 80-20 trades. You took them, they didn't work. Now what you've got to do is just wash the rest of the day. Forget it. Don't put yourself into a hole. Okay. Now, the next thing I want to talk about is of extreme importance. You want to buy and sell to take advantage of the emotion of the moment. I want to use as an example, I taught back in 1987 out of my home for a short period of time, and I had somebody over that was a person that owned 2 McDonald's restaurants, and he was a lovely man, and he asked me during the week. I was only teaching about 3 people at the time, And he says, can I go, if I see something, can I go to the phone and place an order? That's what you did back then. I said, sure, as long as you don't disrupt the class, that is fine. So early in the morning, the market was up. This was back in 1987. This is when the market was, the Dow was at the 2000 level. Okay? The Dow was at the 2000 level. And the market was up that morning about 20 points, which is huge. It's a 10% run, like roughly an 8, 9, 10% run on that level to the upside. He wanted to go over and buy some call options after the market was up to 20%. And as I saw him put the order in, I asked him to cancel it. Please cancel it and sit down, which he did right away. And he sat down. And I said, I don't know if I'm going to cost you any money here, but I strongly suggest that trade is not a good trade for you, because you're not taking advantage of the emotion of the moment. If you did anything during that time when the options went nutsy to the upside on that run up, you should have been selling the option, selling or whatever you do, buy puts rather than calls. So he listened to me, and about 20 minutes later, the market did not come down at all. The market went completely 100% flat. The market did not come down. And I said to him, now, if you want to go in and buy your calls, do you still want to buy them? He said, yes. I said, go in there, go up there, and put the order in. He bought his 5 OEX calls at a price that was 3/4 of a point lower than he would have bought them when the emotion was extremely high. And you don't go in the same direction of something when the emotion is extremely high. You got to wait until things level off. So that's what he did, and he saved himself 3/4 of a point on 5 options. It wasn't a big deal. He saved himself about $350. I don't remember exactly, but that's about what it was. But you want to buy. You want to buy before the emotion gets crazy to the buy side. You want the momentum to build after you buy, but you don't want to buy after the momentum was so huge that the market was up about 8 or 9 or 10% in the first half hour. You don't want to buy options at that time. You got to wait for a pullback. In the same way, if you're going to go short, you have to sell something before the emotion starts to break big to the downside. In other words, you have to take advantage of the emotion of the moment. When the emotion is very heavy to the downside, that's when you want to cover your short. You want to think about closing the trade. Short-term traders are not overly analytical. They're able to pull the trigger. Generally speaking, the better the opportunity, the shorter time it will be available. Okay. If you're more of a guy that likes to analyze things, this game is not for you. You almost have to be. We will show you when we get into the actual trading of the product. We trade the E-mini because that's what I trade all the time. But if you basically follow what I say with this emotional discipline, you can trade most anything you want. But I suggest trading something that relates directly to the market. That's why I trade the E-mini. Anyway, when you have to see something where you're watching the computer, you're looking for these specific setups, which we will show you, and then you go instantly. You can't sit down and overanalyze something and decide, well, maybe yes, maybe no, or let me look at this, let me look at that, because time is money. Since time is money, you're going to have to get involved at the moment. Okay? You have to have a sense of urgency. You have to be decisive. Do not, I mean this sincerely, do not overanalyze the situation if if you see an 80-20 trade. But if you see an 80-20 trade, you have to hit it early in the trade, or you leave it alone and let the train just leave the station. That's okay. Your capital's in check. If you can't get everything your way, what do? We act like sore losers. We do not play the game.